Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, in this video you're going to learn the top 13 biggest mistakes that you're making right now that is killing any chance of you becoming a really good trader. So in this video you're going to learn the top 13 mistakes and how to overcome them. Hey guys, it's John Howell here, and in this video I'm going to walk you through the 13 or the top 13 biggest mistakes that most traders are making right now that's killing any chances of them being successful, so that you can stop yourself from making these mistakes, which will also lead you having to the shortcut or your shortcuts with your path of being successful. So let's actually talk about here. Mistake number one, thinking it's the market. See, here's the thing, okay? Most people who are trading the markets, they try to, this is what happens. They try and trade a stock market trading system, and if it doesn't work, they'll say, it wasn't for me. Then they'll try a Forex system. And if that doesn't work, well, then they'll try an option trading system. Then they'll try a CFD system. Then they'll try a futures trading system, and so on and so on and so on. And you might be in the same position right now, right? You might have tried all these different systems. Like, well, Forex wasn't for me. The E-minis wasn't for me. The stock market wasn't for me. The options wasn't for me. You might be in that position right now. And let me actually tell you how you can actually overcome this mistake. And it's actually around about a biggest myth that most people are buying into right now, which is actually stopping you from moving forward. Listen here. It's important that you're trading a trading system that is based on price action, because price action doesn't change. And therefore, if you can trade one system and apply, and therefore what can happen is you can trade one system and apply it to any market out there. And in this free video series, I'm going to give you a few trading systems that you can trade on any market. So keep an eye out for that coming in the next couple of, or in this free video series that I'm releasing over the next couple of weeks. You can actually see that I'm going to actually give you a trading system there, okay? But what I'm trying to say here is this: is that if you can have a trading system, then I'm going to give you a few trading systems in this free video series I'm going to be giving you. Then what happens is that these trading systems you can actually trade just using price action alone. Okay, so you can see here, right? This is keyword here, price action. That is the absolute keyword there. And what happens is that the trading systems that I'm going to give you, all you need is price action. Now, if price action doesn't change from a Forex chart to a futures chart to a stock chart to a bonds chart, okay? A chart is a chart is a chart. So if you can trade one system that is based on price action, that means you can trade the Forex chart, that means you can trade the futures chart, that means you can trade the stock market chart, you can trade any chart. And if you want to wrap that around using things like CFDs, okay, or you want to use options, then you can. Does that make sense? I know it's a bit counterintuitive the way most people teach out there, but what I'm saying is that you can use one system on any market out there. It's no longer, this is a Forex system, this is a stock market system. No. What I'm going to teach you, I'm going to show you is how to apply one trading system to any market out there. I'm going to show you exactly how that works. Again, in the next few videos leading forward, I'm going to just show you that when it comes to the trading systems. Okay, so let's actually keep going through this. That's the mistake number one: is people thinking that is the actual market. It's not. It's you're not applying. You just don't have the correct trading systems, which is based on price action. Okay. Let's actually move forward here. Mistake number two, not being patient with the setups. You see, when trading, most people are trying to trade all the time, and every time they're in front of the charts, they're trying to force it instead of sitting back and waiting for the perfect setup. This is only going to cause you to go backwards because of the mistakes you will make, and basically it's not going to help you towards your success there. Okay, so what people do, they try to, what do? They try to rush it, right? They rush. They might be trading a daily system or an intraday system, and they're trying to force to get into the trade. See, my best trading setups and my best trading times are when I sit back and I'm waiting for the best setup to come to me instead of me trying to force it. Okay, so how do we actually overcome this mistake here, this mistake of being impatient? Okay, let's actually look at this. When you're trading your trading system, what you need to do is you need to find the perfect setup. Okay, so if you're trading any trading system out there, find the absolutely best, crystal clear, precise setup. Okay, and what you want to do is you want to print it out on a large piece of paper and stick it on the wall. So here's the thing after that. One, when trading, ask yourself, does this setup that I'm about to trade look like that one on the wall? And 2, what does my gut say? And if they both say yes, then it's generally a pretty good trade to get into. But if they say no, then no matter how much you want to trade, you need to get up and do something else. Get away from the computer. Makes sense, right? So that's the best way to overcoming this. So many people, they want to continue trade, and you might be in that position right now, right? You might be just taking ugly setups, or trying to force the situation, or trying to get into trades that are just not they're just not perfect. And so therefore you get into it anyway, and you're like, oh well, I'm going to get into it, even though it meets most of my rules, doesn't mean all of them are still going to get into it. And that is the wrong thing to do, right? What you want to do is you want to be able to trade the most crystal clear, most highest probability setups, the perfect setups every single time. And this is going to see your profitability go higher. It's going to see your win-loss ratio go higher. It's going to see your confidence go higher. And it's going to allow you to actually it's going to allow you to put more money onto a trade, which is going to help you overall make more money. And it's going to be a compounding effect overall. Makes sense? But if you're just taking these trades that are not absolutely perfect and absolutely waiting for these setups, then what you're doing is you're kicking yourself out of the markets. And listen, I understand if you're intraday trading right now and you're trading the E-minis or Forex and you're trading a 5-minute chart or a 10-minute chart or a tick chart or 1-minute chart, right? And you're looking for these setups. I understand, right? It's absolutely, it just kills you, right? Sometimes you're gonna sit there for hours and hours and hours on end and not take a trade. But trust me, when you sit there and you wait, and when you start to see a setup a trade setting up, and you see this, like, right? You look at the Warsaw, yeah, this is set up exactly like that, and your gut says, yes, this is the one, right? You've waited and waited, and you get onto that trade. Now, it doesn't mean you're going to make money on every single trade by doing that. It doesn't mean that, right? But what you're doing is you're giving yourself the best chance, and generally what's going to happen overall, you're going to be so much more relaxed. You're going to be so much more comfortable getting in the position, and everything's going to start compounding from there. I hope that makes sense, right? Let's continue here. I got 13 of these to go through, and I'm only on number 3. Not paper trading. This is another mistake here. Yes, I've been here before. I buy a trading system, I get excited, and I jump straight into live, real money trading. This always leads to making mistakes and sleepless nights. They never spend time paper trading before trading live because they're like, I want to make money now. Right, and I know most of you don't want to hear this. Like, I don't want to paper trade. I want to just trade live. But do you know, actually, by doing this, because you're trying to rush into the markets, and because you're trying to rush into trading, guess what's happening? You're actually setting yourself back further and further and further, because you're trying to rush it, right? And I tell you right now, if you try to rush anything in the market, you end up tripping over, and it's like you trying to go for a sprint, right? It's like you're going to go for a sprint, or say you're going to go for a race, and you start the race and you go for a big sort of 100-meter sprint. And guess what happens? Well, you get there, you get your bag on, and your shoelace is not tied. But guess what happens? You're like, oh, quick! I've got to rush! Get into this! Quick! And you rush into it, and you don't tie your shoelace. You don't tie your shoelace. You're like, oh, I don't have time. I've got to quickly get this now. Right? You get in there and you sprint, and guess what happens? You trip over. And I know that's not likely to happen in a race because you're like, your shoelace is tied. But that's an analogy of what actually happened to the market, right? You quickly rush into it without preparing properly. You didn't actually, you didn't get your legs massaged, so you're not going to get any cramps. You didn't tie your shoelaces. You didn't do all these things before you actually went onto the track. Make sense? Before you start the race, you need to do all these things before you actually start to live trading, okay? So let's talk about how we overcome these mistakes. When you get into any system, you need to have the mental attitude that this is a process, like I was saying before about the racer, right? To not only understand this system, you're about to trade, but trading it successfully, okay? And part of the process is spending at least a few months paper trading and then moving up from there, which leads into the next biggest mistake, which is starting off too big. When you start trading, you're starting off too big. See, when most people start trading, they jump straight into with a large amounts of money per trade. and they say, I got a pro showing me the trades, so why not just start big? Because, you know, the bigger my positions, the bigger my positions size is, the more money I'm likely to make, right? Well, I'm telling you now is that that's absolutely wrong. Let me tell you why. Here's what I found, and here's how you can actually overcome this mistake. Here's what I found. The smaller my trades are, the more money I make. No, I don't mean if you trade, say, $1, then expect to be expecting making a full-time income from the markets. That's not what I'm saying. But what I am saying here is you need to trade an amount that if you do have 1, 2, 3, 4, or even 5 losing trades in a row, that you would not care, right? You would not absolutely care. And the reason why is because your position size and your risk and money management size and all that sort of everything that's defined in there, it's not that big where it's going to make a big dent to your overall trading bank. Is it making sense so far? So trading in this size range, or this size range per trade, is going to allow you to stick to the plan, make less mistakes, okay? Because by trading this size, by trading this range here, it's going to allow you to stick to the plan. It's going to allow you to make less mistakes. It's going to allow you to let the trade run. You're going to cut your losses short, etc. You see, when trading too big, all the mistakes happen. And you've probably been there before, right? You start trading too big and you know that, hey, if I get a stop out on this trade, it's going to hurt. Well, guess what? When trading, the fact is you can't get every single trade right. That's an absolute fact. And you're going to have times, you're going to have periods where you're going to have 1, 2, 3, 4, or even 5 stop outs in a row. And that's just going to happen. Guess what? Get used to it, because that's called trading. It's how you manage those losses. Right, it's how you manage those losses of how successful you're likely to be, right? So when trading too big, you're likely to make these mistakes more and more and more because you're trading too big, and now more emotions are coming into trading. When you're trading a position size where you can have 1, 2, or 3, or 4, or 5 losing trades in a row, then and you're not really worried, then you can start to move forward in a big way. And that's how you actually start to become a successful trader. I'll give you a quick story. A while ago, I was actually running an auto trader, meaning that I was actually trading basically on other people's accounts. I traded my account, and I had hundreds of thousands of dollars of other people's money where they'll basically take in the same position automatically. Okay, so I was effectively trading their accounts for them, right? And when I started the auto trader, I think my first 4 or 5 trades were actually losers. For the first 5 trades, they were actually losers. But here was the thing. Because I had everything under control, where I had good trade management, had good risk management, had good money management, and everything was good there, all those 1, 2, 3, 4, even the 5th loss, it wasn't actually a big dent on the account because I kept my losses small, right? I wasn't a big dent on the account, and all the auto trade, I didn't get one little email saying I suck as a trader and blah blah blah. Why? Because even though I had 5 losing trades in a row, I made sure I kept those losses small, right? And I just kept sticking to the plan, kept sticking to the plan. And guess what? The very next trade I made, I let the actual trade run, and it recouped most of the losses. The next trade after that was also a profit, and boom, we're back in the green again. So I had 5 losing trades in a row, and then all I needed was 2 winning trades, and I was back in the green, well back in the green, okay? But by the account being up by 2 or 3%, from memory. So what I'm trying to say there is that if you start to trade big, and you start to have 1, 2, 3, 4, and 5 losses, 1, it's going to be a big damage to your account. 2, it's going to be a big damage to your confidence. 3, it's going to be big damage to your overall approach to the market. And now you start to you're likely not stepping up when you should, and all these mistakes happen. Does this make sense? I hope you can see this, guys. I'm truly trying to help you out here when trying to trade. Don't try and trade big amounts, okay? Because it's not going to help you at all. And I'll talk about that in one of the other mistakes I'll talk about here, okay? And I'll talk more about position sizes and how to actually escalate that in another mistake moving forward. But first, let's actually talk about this one here, number 5. Not having a trading style fit into your lifestyle. This is a big one. And guess what? I've been here before, right? When I had my cancer story and stuff like that, and I'll talk about my cancer and basically my 10 years of trading experience and what's actually happened over that time. I'll talk about that in a minute. But let's actually get through these mistakes first, okay? See, when most people start trading, they look at the type of trading that's going to make them the most money. And they do that, and most of the time, it's the Forex trading or E-minis trading, right? Because you see this like intraday trading. and then you end up all night or all day in front of your computer, and everything else gets thrown out the window, your health, family, etc. Okay, and the point I'm trying to say here is that is not long-term successful or long-term sustainable. And I've been here before, right? And you know, again, if I'll talk about that in a minute. But you know, I've been there before. I've been in a situation before where I've been trading all day and all night and stuff like that. And that's how I got cancer. That's how when the doctor said I had 6 months to live, and that's how, you know, my relationships got out of control. I didn't spend time with my kids, and I was very unhappy, even though I was making good money, $30,000 per month from the market and stuff like that. Makes sense? So it's important to actually be able to have a trading style that's going to fit into your lifestyle. So let's talk about how we can overcome this mistake. What you need to do is you make sure that when you're trading, when you're looking at a trading style, that you can actually fit everything else in as well too. I mean, exercise, family times, holidays, etc., and it not affect your income. I'll give you an example. A little while ago, I actually went to Las Vegas, and while I was at Las Vegas, I spent 2 weeks at Las Vegas, and that month, while I was in Las Vegas, I made close to $80,000 from being involved in the markets. So here I was spending 2 weeks out of a whole month at Las Vegas, and I made close to $80,000. How did I actually enjoy my time in Las Vegas and have a good time in Las Vegas, still be able to make really good money like that? It was because I had my trading style fit into my lifestyle, where my trading only took around 30 minutes per day. So I could spend 30 minutes per day, do my trading, and continue doing that, and still make good money. Make sense? So trust me, guys. I'm a guy that actually trades as well. I'm actually quite a big trader. Okay. So let's actually talk about this thing here. Number 6 here, which we touched on this a little while ago, but let's actually talk about this. Not understanding the 3 management areas. You see, 90% of plus of most traders, or most traders' time is spent on trading the systems, and basically focusing on making as much money as they can, and they totally not focus on these areas which can make or break you. Now let me actually tell you what I'm talking about here. When overcoming these three measures, it's important here. It's important to spend time and focus on getting better at not only understanding these 3 areas, but implementing them into your trading system. You see, you have a trading system, and then these 3 areas help you minimize risk and loss, and also help you increase your reward. These 3 areas are risk management, or risk, money, and trade management. And also in this free video series that I'm going to be giving you moving forward in this basically free video series, I'm actually going to devote one video very soon to just this one topic. So make sure you keep an eye out for that. And I also know a lot of people are really into that. And I'm also going to be adding a few other mindset techniques as well to that video as well too. Okay, so make sure you keep an eye out for that. Make sure you keep your eye on the emails that I'm sending out, because you'll be able to make sure you get those and understand the 3 areas of management. Okay, but this whole biggest mistake here is just so you understand what's going on there. Mistake number 7. Let's focus here. Focusing too much on indicators. You see, this is one of the mistakes that I was making only up to a few years ago. But most people using indicators in their trading systems to trade, and they say, well, this is, and so on, right? So what happens is this: they focus so much on what the indicators are saying, and they forget most other things that they're saying there. So like, okay, well, because the trading indicator is saying this, I'm going to do this, and so on and so on. Make sense? So let's actually talk about this here. I'm not saying using indicators is bad, but it's important that most, like 90% of your trading decisions must come from the price action, and then using indicators to confirm it. Here's the facts. I used to trade with indicators, but I realized that they kept me out of some really good trades. Since I don't trade with indicators anymore at all, okay? When I trade, I simply trade with a blank chart. That's all I trade with. At all. My trading is a lot simpler, and my profits have actually gone up. And also in this free video series, I'm going to show you a few simple trading systems that you can use on any market that don't use indicators. So make sure you keep an eye for that, okay? Again, in this free, as I said before, I have a massive amount of education to give you in this free video series. And I'm also going to give you a few different trading systems that you can trade on any market that don't require indicators. Wait till you see that. You're going to absolutely love it. So keep an eye out for the emails for the next free videos for that as well too, okay? Mistake number 8, setting goals too high at the start. See, most people when starting out trading, they say, my goal is to make $8,000 per month. And when they've made no real consistent money from the markets, and this causes them to trade too big, too much, which only causes them to lose money overall. So how do we actually overcome this? How do we actually overcome wanting to set too high or too of a goal? Okay, let's actually look at this here. Yes, your long-term goal might be, say, $8,000, but start with a goal that's, say, making only $80 per month for 3 months straight. Okay, so let me explain here. Most people are saying $80 per month. I'm here, John. I'm here to make good money. Okay, I understand that, right? But it's an overall process. Start with $80 per month for the next 3 months, and just set that as a goal for $80 per month. Because I'm telling you right now, if you can't make $80 per month straight, you can't do $8,000 per month straight. All right? Trading this small will also get you in the habit of doing the right things at the right time. Right? And see, once you're doing $80 profit for the next few months, then don't do anything different. Keep doing the exact same thing, but then just bump it up to, say, a little bit more contracts on per trade, and now you're doing $800 per month for the next few months. And then once you're doing that, bump it up even more, so now you start to make $8,000 per month. Can you see the progression there? Right? If you start doing $80 and $800 and $8,000, you're naturally progressing into the higher contracts. But don't start. Remember I said before, one of the mistakes is trading too much. Trading too much, trying to make $8,000 per month straight away is going to do your head in, right? It's like the race, right? It's like the race. The racer doesn't get to the field just with your clothes on, with not preparing at all, right? And then does the 100-meter sprint. What does he do? He does his exercises. He does his warm-ups. He does his stretches. He gets his massage. He does all that sort of stuff. That's basically his pre-track race, right? And it might take him 6 months, might take him 12 months to prepare for that 100-meter sprint. This is the exact same thing, right? You're preparing for the $8,000 target, the $80 per month straight, onto the $800 per month, and then build it up from there. Because I promise you this, right? Once you know you can do $80 per month straight and you do nothing different, you start bumping up to $80 per month straight, and you do that for 3 or 4 months straight. You're doing $800 per month. I promise you that going from $800 per month to $8,000 per month is a piece of cake. All you have to do is just bump up the contracts, and then you're now making $8,000 per month, right? Doing the exact same thing, not trading any more time. And if you've got a good trading style that's fit into your lifestyle, and now you make $800 per month, and not trading any more time, guess what? Bump up the contracts. Now you're making $8,000 per month. And then once you're doing $8,000 per month, remember I said before, right? While I was in Las Vegas, I made $80,000 in 1 month, and half that time I was in Las Vegas. Well, no, I'm not suggesting that you can do $80,000 per month. But 10 years ago, I started off with goal here. I started off by $80. Then I went to 800, and then I went to 8,000, and then I went to 16,000, and I went to 30,000. And I've actually built it up from there to making $80,000 in 1 single month, right? So that's the natural progression if you wanna continue moving forward there. Okay, let's move on here. Mistake number 9: not being flexible with the market. See, when most people trade the markets, they get into a trade in the hopes that the trade will go in the right direction, either up or down. When they get into the trade, they find as many things as they can, right? As many things as they can, and make up as many stories why it's going to go into that right direction. And if it doesn't move in that right direction, the more stories come out, trend lines come out, etc. All these things come out, right? And before you know it, which was a small loss has turned into a massive trade that blows you out of the market. And you've probably been there before, right? You have a set of rules, you get in, and then suddenly it goes against you because you're so set on that thing going up or going down depending on your direction. Just say you want the market to go up, right? You're so certain on this market going up, and the market did keep going up, the market did go up. You're so focused on the market going up, and what happens is the market well, the market didn't go up, right? Market went down, but because you're so certain on this market going up, you weren't flexible with the market, then you say, no, this thing's got to go up. And all these stories, you start looking at different time frames, you start bringing in indicators, you start drawing trend lines, you start saying all the support here, and all these things, right? Which only is keeping you into a trade which you know you shouldn't be, and those turn into what we call a pain in the neck. I remember after blowing myself out of the market the first couple of years and coming back, I had a $5,000 trading account, And doing this one simple thing, right, this one mistake actually blew up about 50-60% of my account in one night. Yes, it happens to a lot of us, right? But how do we actually overcome this mistake? Here, we talk about this here. Every trade you get into, except that it can and it could be a loser, have a level where you're getting out for profit and loss no matter what, and stick to it. Don't add other rules or stories in to keep you in. You won't get every trade right. So once you get stopped out, it's important to keep the losses small and the profits big. Remember I was telling you before about the auto trader, right? The auto trader thing was I kept the losses small and I kept the profits big, and guess what? It's the key, as saying here, right? It is the key. Let me draw here. It is the key to long-term successful trading, and that is the absolutely key. Keep your losses small, all right? Keep your losses small, keep your profits big, and don't make excuses or don't add stories of why you should be in the market. Get in there, have a set of rules, and start to move up from there, okay? Let's continue here. Mistake number 10, too much on the charts, on too many colors. Let's have a look at this chart here as an example, right? And this, I know some of you guys are trading like this. Some of my private clients are showing me charts like this. And this is actually one of the charts they showed me, and I'm like, no, you shouldn't be doing this. Just think about this as a simple point of view here, okay? So just think about this here. When we're trying to trade, right? When we're trying to trade, we're trying to make a decision on a trading position. And just think of it, our eyes and our brain is a machine, right? And if we're trying to take in every bit of thing that's on this chart, let's have a look at this here, right? We're trying to take in, if this was your chart here, you're trying to take in these lines here, the support resistance lines. You're trying to take in these diagonal lines through here. You're trying to take in the red and green, the green and red bars. You're trying to take in the moving averages. You're trying to take in the green colors here. You're trying to take in the blue background. You're trying to take in these white bars. You're trying to take in, and now you might not see that, right? You don't want to see that, but guess what? Guess what's happening? That's exactly what your brain's taking in, right? Your brain is taking in all this information to try to make a decision. No wonder most people get confused when they're trying to trade, right? Because they've got all this here, so much going on, right? So it's important when we're trading that we keep it as simple as possible. So instead of having a chart that looks like this, have a chart that looks like this. Quite different, right? Remember I said before that my trading style right now, after 10 years, my trading style is actually what you see right now. What do we have here? We have a white background. So the brain doesn't actually have to take that in, right? It doesn't have to take in white background because it's not another color, right? So that's one thing. What else do I have here? I only have the exact same colored bars. So the bars are not different colors. Now this might not seem a lot, but when we're actually trying to read the price action here, we're trying to read the highs, we're trying to read the strength, we're trying to read the exhaustions, we're trying to read the power turns, we're trying to read all these different things, which you will learn moving forward, right? You're trying to learn, all these different things, and what we're trying to do is we're trying to read what the market is telling us. Then the less things on the chart, the better, right? So what we have here, right, is just an axle down here, an axle down here, a white chart, and a black background. Now let me actually ask you a question here. If you're trying to read the market, right, you try to understand what the market is telling you, which one do you think is going to be easier and for you to come up with a decision much quicker of what the market is doing? This chart here or this chart here? Well, this chart here, right, obviously. And here's what one of my millionaire mentors have told me and my coaches have told me. That the quicker we can get and make a decision on what the chart is telling you, whether it's a trade or not, and the quicker we can move on, the less time we actually have to make a story. Makes sense, right? So many people can sit in front of a chart for hours and hours and try to make up a story of why there should be in a trade. But if you can come up with a process of making a decision really, really quickly and move on, that's going to give you less time of making up something that's not really there. Makes sense? That's mistake number 10. Mistake number 11, not checking the higher time frame. And this is a big one, okay? Let's have a look at this. Let's have a look at this chart here for a minute. Let's just say, for example, you're trading this chart, and what we're looking at right now is we're looking at a 5-minute chart. And we're just trading this 5-minute chart. Some people do trade the 5-minute chart. But look at this here. What we notice is that you might be in a trade, right? And the market went up to there and it actually stopped and it backed off. And you're like, how come the market started to back off quite significantly? You can see here, right? That what happened is the market took off. It had a bit of a pullback. The market took off, and then it really started to step back here, right? And what that showed, right, is up here was a lot of forcing power of the selling, right? And if you're just trading the 5-minute chart, like you see up here, the 5-minute chart, if you're just trading the 5-minute chart, that's all you see. Like, hang on, how come that stopped there? And so, but what you don't see is the bigger picture. So what we need to do is we need to be checking the higher time frame. You're trading the 5-minute chart, then we need to check the hourly chart. And this is the hourly chart here. You can see this is the hourly chart. And this point right here was the exhaustion point on the 5-minute chart, right? But what you didn't see is what you can see on the hourly chart is there was also a major resistance level, and the market is actually getting up to a level of major resistance where the market is likely to stall and also back off a bit, where it's going to struggle to get into, right? But looking at the 5-minute chart, you couldn't see that. All you could see is just what's there. Makes sense, right? So just by looking at the higher time frame chart, you were well aware that, hey, this market is likely to stall and even back off a little bit here because we're running into a major area of resistance. So it's important when trading, lining up two time frames, your time frame that you're trading, and this is a 5-minute chart here, and lining up the other time frame chart, which is an hourly chart. Now for me, when I'm trading, I like to trade the daily chart and look at the weekly chart for the bigger time frame, right? Setting the parameters. And again, in this free video series, I'm going to walk you through exactly properly how to set this up properly and how to read the longer term time frame chart, such as the hourly chart or the weekly chart, so you know exactly when you're trading your trading time frame, such as this chart here, then you know exactly how to read it properly. Anyway, I'll talk more about that in the next few videos when I release it, okay? But let's have a look at this here. What we need to do is need to have them side by side so we can clearly see if we're trading, right? We can see that this point right here is this point right here on the hourly chart. And if we're looking at the 5-minute chart, we're looking at the daily chart, we know if we're in a trade, okay? If we are in a trade, let's do this. If we're in a trade and actually, let's go back to there. If we're in a trade, then we know that, hang on, this overall major resistance level here, this overall level of resistance is likely to stop the market, right? So if we can see this overall resistance level here is likely to stop the market, and you can see, okay, it's getting up to this position right now, then if you're in a trade right here, and just say the market started taking off and you started getting the position right here, and the market took off and it started getting up to here. Well, guess what? You now know, right? You now know, hang on a minute, this overall level here is the exact same level of resistance, and we're likely to get into we're getting into what we call a higher time frame resistance. Now, let me ask you a question: what is stronger, a 5-minute support or resistance, or an hourly chart support or resistance? Of course, the hourly chart and support resistance. So when we're trading the smaller time frame chart, all right, if we're trading the smaller time frame chart, then what we need to do is we need to make sure we keep an eye on the longer term time frame chart. And for you guys, or for me, what I like to do is, like, this is a daily chart for me, which is the time frame I'm trading, and then I use the weekly to have the parameters of what I'm looking for. And again, I'll walk you through. I'm going to devote one video to walk you through exactly how to define the parameters of when you're actually trading. Okay, but let's actually continue here. Are you guys enjoying this? Are you guys writing down a lot of stuff here? Cool. As you can see, I'm really trying to add a lot of value to your trading, so you can actually really help you and really understand these mistakes. Let's continue in. Mistake number 12, trading in a fearful state. You see, we've all been here before, right? But the times when you open the chart after having 2 or 3 losing trades in a row, and you're in a fearful of having another losing trade, or you've been trading intraday and you've been taking, say, 10 trades that day or night, and your account is down. All you want to do is get your account back to break even. And you're probably saying, yes, Sean, I've been there before, right? You're trading heaps. And then what happens is you're down for the day or you're down for the week. You're like, all I would wish to do is just get my account back to break even, right? And all I say is that this turns out to be the worst thing that you can start to think about, because now you start to, in some of the mistakes, what happens? You start to force things, right? And then this starts to lead to mistakes a lot of happening. When you start to force things, you start to lead to a lot of mistakes, which equals you going to bed in tears, right? I've been here before, and I've been there before. I understand that whole thing there, right? Trading in a fearful state. So how do we actually overcome this mistake? Well, when trading, you need to learn how to read what your body is telling you. And this is one of the biggest things you need to learn. Always ask yourself, what sort of state am I in at the moment, when you're trading, this is important to do when you're trading, okay? Then with an honest answer, move forward. If you're in a fearful state, then the best thing to do is stop. Even if you're down in your trading on that day or that week, stop, walk away from the computer, do some exercise, play with the dog, anything. Then a few days later, come back with a clear mind. This is going to stop you from going into what we call a devastating effect on your account. Remember I said before, when I blew up myself the first couple of years, and then I came back with a $5,000 account, and then what happened? I blew it up. I blew up 56% of it in one night. What did I do? I was doing the exact same thing, right? I was trading too much, and then I started to make a lot of mistakes. I started forcing things, and I made things even worse when trading, okay? This is a big thing. And no matter what, if you trade in the daily chart, whatever, if you start trading in a fearful state, you start to attract what you fear. Right? And this actually happens in life. You start to fear a lot of things. Whatever you focus on actually expands. If you focus on not being able to get your account back to break even, or you start to fear this, then it's actually like to happen. Whatever you start to fear, you like to attract. So if you're fearing your account going down even more, or you just want to get back to break even, then get out of there and stop it, right? You need to break the pattern. You need to get out of it, okay? Mistake number 13, focus only on education and not getting coaching. My first 2 years in the market, I was $250,000 in debt and facing bankruptcy. I was not doing well at all. Well, I can laugh about it now, okay? But I was just focused on getting education only, but not coaching. And most people watching this video are probably in the same place, right? You're just focused on the education. You focus on the trading room. You're focusing on the trading indicator. You focus on all these different things. But you're not focused on coaching here. Well, let's talk about how to overcome this. The fact is, no matter what education you have, nothing will replace a coach, right? All major successful people have a coach. I have a coach. I spend tens of thousands of dollars per year, even $100,000 per year. And after 2 years of not doing well myself, I got a coach, and then it took off from there. You see, a coach can see all your mistakes and fix them on the spot. That's why most of my investment that I do goes into trading, that's in the trading, is spent on getting coaching. You see, I get coaching from guys that are doing millions of dollars. Why? Because I can't actually see the mistakes that I'm doing personally. If I'm doing something, I just can't see that, right? You know yourself, right? You can notice other people's mistakes, but you can't notice your mistakes. But by having a coach here, it's not only going to give you, it's not going to help you stay on the right track by just focusing on the right things, by keeping you centered, by keeping you in a good state, but doing all these things is going to help you. But it's also going to start noticing that, or you're going to notice these mistakes, and you're going to be moving forward, okay? If you're not getting the coaching, then you're missing out on a big piece of the puzzle here. That's mistake number 13.